Hi, everyone. This is Justin Horowitz with SVN. Welcome back to another episode of the AZOI weekly podcast. Today, we're going to be diving into a topic discussing 1031 exchanges, the benefits, the mechanism and the logistics of using it, who to work with. And so I want to invite, without further ado, our guest on the show, Mike Auerbach with 1031 Specialists. Mike, thank you very much for joining us. How you doing? Give us a little intro about yourself and how you got in the business.
Yeah, no, Justin, thanks for having me. Wish I could be in studio with you guys. I mean, it looks like you have a pretty cool setup. But yeah, I mean, like most people in real estate, started my career in brokerage in Chicago, was a multifamily broker there for a while, and then moved out to Denver during COVID and transitioned to the principal side, acquiring $50 to $100 million apartment buildings and, learning a little bit about the business in a different capacity. And obviously one of the main things was to do a 1031 exchange when it came to selling our properties, and never thought I'd be in this part of the industry. And once interest rates shot up and, our equity was on the sidelines, I knew I had to kind of make a move, and rather than be a syndicator like, a lot of other folks where deals were kind of hard to find. One of my buddies introduced me to these guys, John and Jeff, who started 1031 Specialists, and they're former Goldman Sachs, Ernst & Young professionals, former hedge fund guys, and really got into the business because they were trying to come up with an alternative liquidity product to DSTs. And through their research and exploration, they kept coming back to this weird niche called qualified intermediaries, or also known on the West Coast as accommodators, where everyone who did 1031s had to go through this. And, the whole goal is to build a national name recall brand, which really hasn't been done in the space. And, I'm VP of growth here, and I'm tasked with growing it and talking to a lot of different investors, partners, and really rebranding from an industry level on why people should, use the 1031 as a no-brainer default option versus kind of how it's been portrayed inaccurately, in my opinion, in the last, 100 years.
That's great. Yeah. And that's a perfect segue. I mean, the 1031 is something that's so widely used from a lot of our clientele. And we'll have folks in this audience that are, high level, institutional, professional real estate folks, and then we'll have private capital partners that are doing this more seldom. So with that being said, maybe let's just start with a real high level overview of talk to us about what a 1031 exchange is, why it's important for real estate investors, and just let's break it down more in the 101 level.
Yeah, so really simple. A 1031 exchange is the swap of one investment property for another investment property without paying tax. And so, 1031s have been around in the US for more than 100 years. And this is the most important part, Justin. Like, a 1031 exchange happens just like any other normal real estate transaction, except for a couple key differences. Number one, you have to use a qualified intermediary like my company, 1031 Specialists. Qualified intermediaries are really independent third parties required by the IRS to facilitate 1031s. It's also known as an accommodator out west. I mean, these are interchangeable terms. And number two, from an investor standpoint, you cannot take constructive receipt of the funds. So at closing, if the funds hit your bank account as an investor, the IRS deems it possession and it's a taxable event. So, we kind of come in, we do really three things. We consult and we educate with different partners, different clients about their specific scenarios. We make sure that they get the full tax benefit from a compliance standpoint. They get a form called 8824 at the end of the year, which they give to their CPA that notifies the IRS that they did a 1031. They don't have to pay any capital gains taxes. And number three, probably the most important was that we protect and direct the funds. We're not a bank. We don't hold the funds, but we work with a publicly traded banking partner that has an $8 billion market cap, and we set everything up safe and secure in all segregated trust accounts. So, from a high level, that's kind of, what a 1031 is. And, we want to get more people to really look at it as an option for them to use it when they go to selling their investment properties.
Absolutely. So, I mean, it's one of the most utilized mechanisms to defer these capital gains taxes, and that's one of the big misnomers we run into is clients sometimes not realizing, hey, that money isn't going to get to your bank account, after you close what we call the down leg transaction, right? So, partnering with like you said, an intermediary or an accommodator that you trust, that's reputable, I got to imagine is extremely important. Would you agree?
Yeah, I mean, look, I think the industry has gotten a bad name from some of the companies, like in the early 2000s. There's been stories about how people kind of ran off and had like little Ponzi schemes or are using the money. So, I think for us, we realize that there's a huge gap in how most of these qualified intermediaries take care of their money. And my partners who started this come from a career of money management, essentially taking care of large dollars at risk under strict timelines, which is exactly what a 1031 exchange is, coincidentally. But really, it's about setting it up where there's 3 layers of authorization before the funds even move. We set that up here at 1031 Specialists. Not a lot of other people that are independent may go to the same protocols, which we believe are extremely important. But essentially, for the funds to even move or get transferred, there has to be authorization from us, our banking partner, and then the client. And that's what we deem really best in practice. What we deem best practices across the industry.
Yeah, no, very important. It's critical. We explain that to our clients all the time when we're working with them, that we got to pick the right partner when it comes to this and to think about it. So one thing that I think is always really cool with a 1031 is just the life cycle. And again, there's folks in this audience that might have done dozens and dozens of exchanges. There's folks that are maybe considering their first one. Do you have any deal or client stories or hypotheticals, that can talk about sort of that, how you can take your initial 1031 on maybe a smaller deal and how that sort of rolls throughout your, investment career and how it grows? I mean, any thoughts or any kind of fun stories along those lines?
Yeah, I'm just going to give 2 brief, like really simple examples for just, all the listeners out there. So again, like the true power, Justin, of a 1031 exchange is for the ability for an investor to meet their investment objectives without losing any equity to taxation. So if you think about it, with more money, you can buy larger, multiple, or more productive properties. And so, let's consider the investor who is, sold a single family investment home just on the basic level. Let's say they've got $500,000 in equity, after the property that they're selling. So, when you do a 1031 exchange, you defer the taxes and don't pay any capital gains hit. And if you don't do an exchange, you're probably going to get somewhere around like a $65,000 tax hit. So when it comes to reinvesting the funds, you'll have a lot less equity. And so $65,000 doesn't seem a lot, Justin, but you're talking about $500,000 versus I think it's like $435,000 of not doing a 1031. So, obviously, let's assume this equity is left over for a down payment. I'm just going to use 20%. I know that's not where the market is anymore, but with a 1031, with 20%, you'll be able to afford a $2.5 million property. If you don't do a 1031, you'll only be able to afford a property worth $2.175 million. And so you can see it in a single transaction. The difference is $325,000. But what most people don't understand is $325,000 buys you more property, more diversification, more bonus depreciation, and more importantly, cash flow. And so that's just one example. But let's talk about, like the real estate investors who just keep compounding. I think you guys probably have clients that you guys done 10 deals for, probably more. I think it's safe to say, most people, they can get to 10 deals. Let's just start by assuming that you start with $100,000, and we've done the math on this. That's why I know this pretty well. You're doing a 1031 exchange versus not doing a 1031 exchange. After 10 transactions, assuming you get a 50% return on equity, someone who's done a 1031 exchange will have amassed somewhere between, call it, probably $5.766 million. Someone who doesn't do that and pays the 30% taxes each time after 10 transactions, they'll take home a little bit, over north of 2 million. So after 10 transactions, the difference really is $3.75 million when starting with $100,000. So,
Wow.
that's really significant. But if we really get really crazy, that's 10 transactions. Let's say someone just keeps compounding with that same return on equity, which obviously you and I both know it could be all over the place depending on market dynamics, but you'd be approximately $292 million richer doing a 1031 versus not doing a 1031. But again, like most people just don't spend the 5 or 10 minutes doing the math. And I think just utilizing those two simple scenarios, they can be like, wow, that's a huge difference for sure.
Mm-hmm. It's significant. And, everything you're talking about over these 10, 20, 30 transactions over, literally a lifetime, is deferring these taxes, but there's certainly strategies that take it, to another level where, eventually, you pass down to your heirs and they get the step up in basis. And then it really becomes eye-opening how you can build wealth using, this strategy. Well, now it's great. So let's dive a little more into, the micro side of things here. So, you're a client, you're getting ready to sell an investment property, and it's your first time doing it. Let's talk about the types of properties. And we run into this term like kind when we deal with 1031 exchanges. Talk to me about what are some options if you're selling your traditional, commercial investment property.
Yeah, I hate that term, like kind. I think it is so confusing. People think that you have to swap an industrial building for an industrial. That's completely false. Like kind just means investment property. So let's just forget about like kind. It's investment property for investment property. Any city, any state in the US, there's more than 16 different types of properties. You can go from an office building to a piece of land to single family rental homes to shopping centers. Obviously, I think one of the most popular utilizes of the 1031 has been multifamily to triple net deals. That's pretty popular. But yeah, there's, as long as it's investment or business purposes, the property, the physical asset, there's actually infinite options that exist for an investor.
You basically just can't go buy your next primary residence, with it is what I've gathered for the most part.
Yeah. And the IRS really clarifies personal use as anything that you use 14 days or more out of the year is a second home or personal use. Those are disqualified. Like it's got to be for investment purposes. I will say a lot of people who do the fix and flips really not eligible because the intent there is to realize the gains at time of sale. It's not really a function of, collecting money from a tenant, which is what an investment property is really all about, even if you have it vacant. But yeah, you really have to check with your CPA or a tax structuring attorney. Obviously, different people have different, different appetites for risk, but we typically defer to those folks. When it comes to those questions, can I not? Like, does this meet the timeline? But the one thing that I will mention, Justin, that's really important for everyone out there, there is no minimum required hold threshold for a 1031. You don't have to hold it a year. You don't have to hold it 2 years. You don't have to hold it for 6 months. As long as the intention is investment property, you can do a 1031. So, if I have an office property in Phoenix and I buy it tomorrow and you offer me significantly more money the next day, I can actually do a 1031 out of that. And because my intention was to buy it as an investment. So the important thing really is to understand that the IRS kind of relies on an honor code based system. And so trouble really only comes if, and that's a big if, you ever get audited. And if that happens, you just want to make sure that the facts and circumstances, and you have like a fact pattern to make sure that it's actually investment property versus a short, fix and flip type of situation.
Right. That intent is critical there. And like you said, it still allows you the freedom to make a wise choice to accept an unsolicited offer, but your intent is key on that one. So beyond types of properties, how many properties are you limited to? You're not just limited to buying one. I mean, talk to me about, how you can kind of spread and diversify with a single 1031 exchange and the amount of properties.
Yeah, so I think the 1031, as you pointed out, really great for changing your strategy during a market. Obviously, if a lot of your wealth is tied up in one large asset, you can diversify. Typically, you can identify up to 3 replacement properties, but there's a rule called the 200% rule, which allows you to identify more than 3 properties as potential replacements, provided that the fair market value of these identified properties doesn't exceed 200% of the value of the property that you're selling. However, if you do identify more than 3 properties and the value does exceed 200%, there's another rule called the 95% rule, which means you have to acquire at least 95% of the total value of the identified properties. So basically 100%, right? So we see people all the times. We're working on something right now where, there's an investor who's got a property worth $15 million concentrated in one multifamily property. They're going to try and buy, anywhere from, $10 to $12 Generals, depending on if they can find it or not. So different areas of the market. Obviously, it's really great as we know what's been going on with, California and in Florida and in the Southeast with some risk. It's really great to kind of spread your chips as, different environments change. And we know a lot of investors also go from high appreciation markets where there's no cash flow, which tend to be the coasts, versus the Midwest, which all of a sudden they can take a non-performing, cash flowing asset and now get substantial cash flow. So we kind of see it all over the place.
Right. And so to your point there, so you're selling called $1 million property, and you're going to go into the exchange. Talk to me about what does the next deal size need to look like from a dollar standpoint? Let's just assume right now your net proceeds is $1 million, and we'll talk about debt in a second here. But so the next deal has to be $1 million or more value. Is that what you're saying?
Yeah, typically $1 million or more. It's actually probably take 95% of that because there's a broker that you'll most likely work with to sell your property. So you can deduct that fee, you can deduct title fees, you can deduct our fee. So maybe it comes out to $950, but yeah, like the whole replacement property thesis is you want to buy something greater than or equal to, to not poison the compounding well. So as long as it's equal to, $1 million or $950, if you're using a broker for this example, you'll defer, all the taxes involved. So obviously everyone's a little bit different. And this is probably a good segue into debt, but it's not simply, hey, I've got $500,000 of debt on this property. I'm selling it for $1 million. $1 million minus 500 equals 500,000. You need to replace the mortgage and equity boot, or else it'll be taxed dollar for dollar. So all of the proceeds, the mortgage proceeds and the equity proceeds, that's what makes up the $1 million. And so to go out and purchase another property, you're either going to have to bring more money to the table to cover the debt that you don't replace, or you can put at least $500,000 of debt to, get, the full tax deferral. Does that kind of make sense?
Totally. Yeah. I mean, that's the thing we always have to talk about is you got to replace the debt as well. For sure. Now, what happens, we run into this all the time too, where the next property is less. I mean, how does that work? As far as taxation, does it not qualify entirely, or do you just get taxed dollar for dollar on the difference?
Yeah, great question. So yeah, you'll get taxed dollar for dollar. We have people do partial exchanges, really for life expenses. People have different milestones and things that they want to take some cash out of, totally doable. We work with people all the time that do that. I think in general, they just have to talk with their CPA. They will be taxed dollar for dollar. And so, look, I think everyone's got a different makeup, whether you own one property, whether you own a portfolio of properties, which state that you're in, right? That matters too. But, our job really isn't to tell you like what you should or shouldn't do. Our job really is to lay out, the information and educate the investor and our partners of, hey, here are the options. This is what your exposure looks like. Go over it with your CPA and then come back and let us know what you're comfortable doing. And we're comfortable operating whatever someone wants to do. We just want to make sure that they're aware and that they have options, and ultimately, like, they can go on and get to their number faster of generating either more cash flow or value when it comes to real estate investing.
Absolutely. Timelines. So obviously you're selling your property. There are restrictions on what you need to do and when you need to do them within a 1031. Walk us through the logistics and the timelines of what a seller and a future buyer is doing.
Yeah. So I think this is where it gets a lot of critics in the real estate industry. Like, the not enough time, it feels like I've got, the clocks, the pressure, I can't take it. Well, as soon as you hire someone like Justin to even meet with you about, having them do a BOV for your property, I would start looking for replacement property. I would really start being proactive. The clock only starts on the date of when you sell your property that in your portfolio. So you've got 45 days from that date, and then you have to close on it within 180 days. You can, some family offices we work with, they'll close on, the same day. But the deadlines are firm, no matter if it's on a Saturday, Sunday, or even holiday, like yesterday. And obviously, the more you plan, the more you mitigate any timeline risk. And so, while, you guys have folks like Justin and his team listing your properties in the marketing process, I'm sure they'll start working with you to find replacement property options, or you can start looking for replacement property options yourself. So that 45 days really could be an extra month, 2 months, 3 months, 4 months, 5 months. And so you'll really get out ahead of it. Where we see, trouble is when someone's like, hey, I'm closing tomorrow. I want to do a 1031. And that's when they kind of feel the pressure a little bit more. But for most folks, and the way I would set it up, when I'm calling an owner, is, what do you plan to do with the proceeds, at closing? And either float the 1031 idea if they aren't familiar with it, or get out in front of it and just be more successful. And that's a big value add for not only yourself as an advisor to your clients, but for the client to make sure that they have enough time to find something that meets their investment criteria.
Yeah. And I mean, look, to your point, we're starting early when we list a property or when we start those negotiations on a deal. Oftentimes we can negotiate into a sale, a seller option to extend closing by 30 days or so. Nothing crazy. You don't want to, take too much time to close the deal, but something just to give them a buffer if they feel like they need it, to make sure we've got plenty of time to go find something. And I've always found, you might as well start off with the mindset of, I'm going to do a 1031. And worst case scenario, if we don't identify something, I mean, you tell us, at the end of a 45-day identification period, someone can't find something they like, they decide we're just going to eat the taxes. The money then funnels to them and they pay taxes like they otherwise would, correct?
Yeah. I'll take it one step further. So there's a lot of psychological friction with service providers and vendors, which we found just by virtue of being in this business for a while. And a lot of people, especially today, don't want to try to do a 1031 because they're scared that they'll lose out on a fee, even though our fee is $1,195. So what we decided to do, Justin, to eliminate any friction, we decided to give 100% money back guarantee to promote people to at least explore doing a 1031, and obviously our broker partners to have 45 days to find possible replacement property. So actually, these investors that end up not finding anything, or they just don't want to do a 1031, they'll get, our fee that's taken out of the settlement statement at closing completely refunded to them. And, they would just, opt out and pay the tax just like any other normal real estate transaction. So we are trying, and this is one of our big initiatives, is we want more people to at least explore doing this, because again, I think the benefits really outweigh any of the negatives that are out there. And, if you at least give yourself the opportunity, you will at least know that you tried to do a 1031 and there's no investment risk or anything else on your end that's different than doing a regular normal real estate transaction. And, we either all get paid at closing essentially, right? Or no one gets paid. So we're kind of all working together with urgency to get something done versus there are certain vendors in the industry that collect a fee no matter what, kind of hold hostage of the deal. Not going to name any professions, but we've all been part of that. And this way, we're all trying to move toward a common goal.
Yep. And that's why I think it's always worth the conversation, worth the try. So you mentioned your fees on that deal. You mentioned your timelines. Far less often do we run into this, but just so folks are aware of it, can you give me a quick rundown on the reverse 1031 exchange?
Yeah. So reverse is opposite. So reverse is when an investor purchases a property first and then sells a property in their portfolio to satisfy the exchange. The timelines are the exact same. So you have 45 days to identify a property in your portfolio that you want to sell, and you have to sell it within 180 days to make sure that it satisfies the exchange. The reverse, typically people have to be pretty well capitalized because most people will use the proceeds from the property that you sell to buy the replacement property. We see a lot of family offices do reverse exchanges, or well capitalized folks do reverse exchanges. The process, we set up something called an EAT. It's called an exchange accommodator title holder. We actually have to take title. We set up a single member LLC because an investor can't take title to both properties at the same time. And then once they sell the property in their portfolio, we'll transfer title to the investor, and that'll satisfy the exchange. So obviously there's a little bit more nuance, a couple more steps. It's typically a lot more expensive. It's around $8,000 versus $1,200 just based on everything that needs to be set up. But for the most part, this takes out any risk on the replacement side if an investor thinks that they can sell their property within 6 months. And for well capitalized people, an opportunity cost, I mean, that's a great option. We just don't see the majority of folks doing it just because they need those proceeds to purchase the replacement property.
Yeah, I agree. It's very few and far between that we're talking about a reverse, but I definitely wanted it to be discussed. This has been great. And I know we're talking on really high level, and we're going to be encouraging everyone watching this, if you do have questions, to reach out to you, Mike, and dive into the weeds with them on their specific deals. But as we sort of conclude this conversation, talk to me just about what you see as some common mistakes or misnomers from buyers, from brokers, from really everybody as it pertains to 1031s, your industry, your processes.
Yeah, definitely. Well, I think in general, we have to do a better job of having conversations at BOV appointments about what people are doing with their proceeds. And that'll set the tone of coming up with a plan of attack for either the brokerage team and the investor to kind of start thinking about what a 1031 is. In general, I think 1031s, we are trying to simplify the messaging on, why it is so important to be a no-brainer for folks in the industry to at least try. And, I think that most common things that we, some of the common things that we come across is people will call us the day after they close and say, "Hey, I just closed yesterday. I want to do a 1031. And, you can't do that. And that comes down to education. And, we're trying to get integrated more on an education level with, some of our tools, some of our content, which I can discuss here in a second. But mainly, 1 in 7 commercial real estate transactions are 1031s. Endowments, pension funds, REITs, most syndications, for the most part, if they have different investors, can't do a 1031. But we want to move that number to 1 in 4, 1 in 3, by the time, our time doing this is up in the next 10, 20 years. And I think it really comes down to this being promoted in a way where it's an incentive. No one likes to pay taxes. People just don't know what they don't know, and that the process is a lot more complex than it really needs to be, especially with that word like kind, which people get confused about. We get probably 10 calls every day, so do I have to buy another apartment building or a single family investment property? I'm tired of being a landlord, right? So and bearing the responsibility. And I think that's what we're trying to do a better job. And it's a tall task, I'm not going to lie, just because changing kind of behavior and narratives, but I think we're up to it. And we've got some pretty cool things that we've got on the docket for 2025 on how we can at least, have more conversations about 1031s and how it's a benefit to a lot of people and partners in the industry.
Yeah, we're right there with you too. And I agree. I mean, as we talk about this, as if you're watching this, I mean, there's certainly some dynamics to this that, raise a lot of questions and might be a little confusing at first. But I mean, the reality is 1031 can literally be as simple as selling a property and buying another property and just doing that normal process that you'd otherwise do. And then letting professionals like you and I guide and help through the management of it. So no, I really appreciate you taking the time. I'm sure there's going to be a lot of folks out there with questions for both of us, but how, can everyone get in touch with you? What's the best way to reach out to you for our audience here if they wanted to talk to you about your services?
Yeah, pretty simply, you can email me, Mike at 1031specialists with an S.com. Our phone number is 631-438-1031. Our website is 1031specialist.com. One thing I'll mention, we literally have the best in-class tools on the market today when it comes to education. We've got our 1031 Bible. It's really 20 pages with pictures written in 2024, 2025 branding, really to simplify the process. My favorite tool is probably our 1031 exchange calculator. It'll let you go through the state that you're selling, if you've done any depreciation, and it'll give you the net proceeds and what you need to identify for your replacement property. That's really great. Also can be downloaded on our site. And the last thing I'll mention, Justin, just because time is really of the essence for deals, I think most people want information quickly as we consume information quickly. About 9 months ago, we decided where the industry was going. We get the same 10 to 20 questions, each day. Hey, I'm in a partnership. Can I do a 1031? Can my partner cash out? Or, hey, I've got this scenario. What are my taxes if I don't do a 1031 versus, doing a 1031? So with OpenAI and the ChatGPT revolution, we decided to make our own. We hired an AI engineer and we fed it the data set of the entire IRS handbook, revenue rulings, 808,000 words of 1031 data. It is not meant at all to not have human-to-human conversations. That's not what it's about. It's about relaying baseline information that's very specific really quickly, but most importantly, being able for people to maintain transaction momentum in their deals. So it's available for free on our website, 1031specialist.com. You can also send it an email, ai@mr1031.com. It'll give you a response within a minute, 10 seconds, probably better than me and most other professionals in my space, just because of how big the data set is. And it's clear, it's concise, available for free anywhere on the planet, mobile or computer. And, our whole goal is to just make sure that we're accessible and responsive, because I think that's what people demand from service providers today. So those are all great tools that I'd love for everyone to just have as a free resource, whether you work with us or someone else, just to make sure that you've got the right information that you need.
I've dabbled with the AI tool. It is so cool. I mean, we tested it out, plugged a scenario in there, and like you said, it just sort of responded to us with some really interesting data to quickly understand tax implications on a specific scenario and asking questions. I mean, it was really, really cool. I would encourage everyone to take advantage of some of these tools that Mike's offering. And I know we are as well. Well, Mike, I appreciate your time. We're looking forward to partnering with you more in the future. Hopefully, a lot of our audience here will do the same. And next time we'll have you in studio and do it live, maybe with a couple cigars, Joe Rogan style or something like that.
That'd be awesome. Well, I appreciate you having me, and keep up the good work. Love the podcast, and definitely have to make it out there, and looking forward to a successful 2025 for everyone out there.
Love it. All right. Well, thanks again, Mike. And again, I'm Justin Horowitz with SVN and the AZOI team, and we appreciate you taking the time, and we'll see you next week.